industrial rents are already up 20% and already at record high levels. How much further can they go?
Carl, I've been in this business for 33 years. I started in 1990, and I've never seen rates so high. For 20 years, industrial rates were $5.50, $6 a foot. So it was flat for all those years. Pandemic arrived, and here we're saying it doubled, tripled in a matter of 2-3 years. Is it going to continue on that path? I'd be surprised. I mean, I think we reached a limit. It probably will stay the same for 20 years again. That being said, what I see in my rents right now, in my negotiations on leases, we see CPI increase. Minimum 2%, minimum 3%. Landlords are trying to get that. So my estimate will be a growth of 2 to 3% over the next 20 years on industrial rates. Already we're seeing companies, I mean, multinationals are it's difficult for them to assume those rents, but they're doing it. It's the worst is the small to medium-sized businesses. It's a big jump for them to achieve those rates. Second of all, what we're underestimating is the technology. At the prices industrial rates are, people will use their warehouse more effectively. They're going to put better racking, better height. They're going to use it to the maximum. When space was cheap, I mean, they wouldn't mind. At the price they're now, they're thinking twice about how to use that space. But in terms of future growth, in my opinion, I think it's not going to go as high as it is right now.
Vacancy rates are so low. And when you think about them, vacancy rates in Toronto are under 2%. In Montreal, they're passing below 5%. We generally call that, a landlord's market. And a landlord can push rents wherever they want. Are you saying then that, tenants are just going to push back against the landlord if the landlord decides to raise rents even 5-10%?
Tenants are not stupid. They saw it coming. First of all, some of the tenants do have provisions of options to renew at fixed rates. So those are the leases, the 5-year leases are coming up. Most of the times we do have a cap on the expenses or a fixed rate that we have. Once those options are going to be passed, landlords are going to try to push to the normal market rent. That being said, tenants already, they have options. We're here to help them find those options. One landlord in Montreal tried to double the rent, and the tenant just closed the Montreal distribution center and decided to use their Toronto office warehouse more effectively. So if you try too much, you're going to find some vacancies. Now that landlord took him some time, replaced the tenant, but didn't get the rate he was hoping to get at that point. So tenants, before signing long-term leases at high prices, they're thinking about it twice. There's also subleases that are there. People are changing the way they distribute their goods. So it's nice to ask. We understand where the market is. It's the tenants that are more captive with their installations that are going to be suffering in the next couple of years, in my opinion.
And is it going to be like a turnover of types of tenants? Like they're going to be, larger tenants that will be able to pay that and crowd out the smaller tenants that don't have the balance sheets to sustain the payments?
That's what I find difficult. I find that the small to medium-sized businesses, they cannot follow the pace of those increases in rent. It's their profit. So they're not going to work for the landlord. So they have to reevaluate how they're going to do their business. It's the multinationals, the big corporations who just factor this in their price, adjusting in their goods that will have easier time swallowing those rent increases. But I'm telling you, it's slower now. Industrial rates, 2 years ago, I was at $8 net. Last year, I was at $12. I thought that was expensive. I just put on the market a new industrial project, 230,000 square feet. We were starting asking rates at $14 net. We rent 50% of the building at $14 net. The next 25%, we increased it to $16, which we were successful in doing. We've got a quarter of the space left, and we're asking $18. We see some pushback at the $18, so we're probably going to accept $17.
Right. And, if they push back at 18, but they have no other option to go anywhere else, will they just take 18? And I say that because, in markets like Vancouver, they're already past $20. You're starting to get $20 in Toronto. We've heard deals done, in the United States where guys have no choice but to pay that $20. Are we there yet? Is that going to happen?
For the Montreal market, we're seeing it now in that range, 16, 17, 18 net. The space I'm talking about is 30 brand new building, high exposure, 30 foot clear property, state of the art. This is a rate without any office component, so it's a white box, and that's how we deliver the space. There's more supply coming in the market, so that being said, some landlords out there have spec buildings coming, which we haven't seen in many years, those spec buildings, but they're coming, and they're trying to rent those buildings. They're not as favorable locations that we're seeing right now. It's more outside second area than what I'm talking about. But this will certainly put a pressure on the landlords to adjust their rates with those tenants.